Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, January 5th, 2008. Well, as we go over what the intraday market looks like today, we see that the market is gently pulling back from some of the major gains we saw last week. Last week was a tremendous up week. We had the indexes across the board in really 4 trading days up between 6 and 7% across the board, which is just a tremendous move. But then again, you have to kind of step back and say, holiday week, light volume, after Christmas, New Year's craze, okay, you can understand it. But having said that, it's not a surprise today to see that now that we're back to a little more normal trading, you are seeing the markets flat to slightly lower, consolidating off of the last week's move. So what you're seeing today, folks, is the Dow down 70 points, the NASDAQ down 2, and the S&P down about 2.3. Really about anywhere from 0.25% to 0.5% to the Dow being down about 0.75%. In the scheme of things, this is a minor pullback. We'll see if we get more of this in the coming days. Really going to be up in the air as we go forward here. Obviously, those in the research center know our exact projections about what we're seeing. But what I really want to focus on today is some chart analysis techniques. Now, what do you know about the market and the technicals? We know that there's resistance and supports, and as a trader or an investor or a swing trader, all you're looking to do is buy support, sell resistance. Well, if we did that on the intraday chart today, and you're looking at the SPY, which mirrors the S&P pretty well for us here, is you can see that the market really had the high point right here. You know this upper area is going to be resistance. You also know gap fill will be resistance on the upside. So let's draw lines across the board and see what we come up with. There we go. Number 1 line of resistance, number 2 line of resistance or support, depending on where it is. All right, and there we go, as straight as we can make it. Now, we gapped lower today and sold off in the initial bell. Now, in tune with that, the key here, folks, is understanding where you're coming down to. After you sell off, you gap down into the 20 moving average. So you're really right on that 20. As soon as you start to sell off, you have to figure there's a fair shot at the market coming down to the support line of the 50 moving average. At that point, you should have a very, very solid level of support. In tune with that, you can see the market getting a bid on the 10-minute intraday here, and the market starts to rally. Now, it comes up to the first area of resistance, which was the gap fill, and actually does not stop there. In fact, it goes to the second line of resistance, which was the high from Friday. That's where we hit the key resistance line in this market, and that's where you start to see the pullback. Now, where does the pullback come to? It comes back to the 20 moving average, and one thing about the 20 is it also coincides with gap fill. So you have a support line now intact. Remember, when a resistance is broken to the upside, when it comes back down, that becomes support. And that's very important to remember because as a trader, we have to know that. We want to trade off of that. And really what you can see for the rest of the day is the market just trading in this sideways manner with little pops around the gap fill area. Here's a pop up, here's a pop back. A pop back up to the resistance line. Notice how this resistance line right here gets double topped, which happens to coincide with this point, so a triple top, and with that the market pulls back in. Notice how it's hovering here again, right around that even level, which was gap fill on the day, and now look at the 50 moving average. The 50 moving average has crept up right underneath, coming in tune with that line as well. So you can see it all kind of coming into shape and form where the support and resistance is on this quiet first day back of now we're back into normal trading. Now, you still have very light volume in the market. There's what's called a hangover effect, which is usually after a vacation weekend, you start to have a little bit of a quiet market. Okay? Very quiet market because people take an extra day, they get settled, they want to get back into things, and that's what you're seeing here today, folks. Now let's go to the 60-minute chart because I want to focus on a few other things. If you look at the 60-minute, you can see this monster move we had last week, which is now starting to consolidate. And I want to draw the line in here. That's that upper line from the high on Friday. You can see here. And in addition, you can see the lower kind of resistance points, support points in this sideways move today. You can see the gap down here on the 60-minute. Again, this is the 60-minute chart. But one thing I will tell you, folks, is that this market move up is a little extended on the upside. All right, whenever you get this far away from the 20 moving average, where you haven't touched it in a matter of, well, really since this day back here, so 1, 2, 3 days, there's a point where you're going to have to touch that. It's just the way it is, and you can expect to see that. And while we speak, folks, actually we're seeing a little bit of a sell-off now in the markets. Notice the 60-minute chart selling here, and also notice this breakdown possible. Now, it's not a confirmed breakdown because you haven't closed below and you haven't confirmed it to the downside. Should we break this point, then what you want to look for is the support line coming right here on the 10-minute chart, which would be basically in the tune of that even lows of the day put in right here. Okay, so watch for that as well, folks. And now let's go back to the 60-minute, but I just happen to see the market selling here a little bit, so we want to keep tuned with that. Now, again, ultimately, you have to anticipate at some point this 20 moving average and the price on the SPY on the 60-minute will converge. Whether or not it's up in this range where one comes down and one goes up, I do not know at this point. I can make guesses and assumptions and calculations, but again, that's saved for the Research Center players in there, the sign-ups, the subscribers of the Research Center at inthemoneystocks.com. So we'll obviously keep a close eye on that and analyze that in tonight's video and the Research Center and give you guys all our projections. But again, one thing you have to note, folks, is that this move on light volume was a little too far, a little too fast, and now you're seeing that flat to slightly lower day. Now the Dow is down 100 points, and that's what you have to expect. You have to be understanding of that and realize that when you move up this far, this fast on light volume on a holiday week, the fair value surely needs to come back into play here, where you get a little bit of a pullback in the markets. All right, folks, so that's a little analysis, what I want to touch on right now. The other thing I want to talk about is, folks, on the GLD chart. Let's go to the GLD chart, and you can see the GLD gapped lower. On Friday's Research Center video, we called out there was a resistance point, a key resistance point, calling for a drop on the GLD on gold. Sure enough, today, look at this drop. Very, very big drop on gold. It rallied back a little bit, but is still having a little trouble here, still far below even point, down $1.75 on the GLD. And that's just another example of the calls we do in the Research Center that'll give you a heads up on where the market's going and where it should be headed. All right, folks. Last but not least, oil trading slightly positive today, at least for now. We can quickly look at the USO intraday, and you can see up a little bit here. A nice little continuation. Again, us calling the pivot day about 2 weeks ago or a week and a half ago on oil was a beautiful call, as we saw a pivot low put in, and off of that low, you've had a huge move up. A lot of people in the chat room and with us around there knew we had the DXO, and the DXO having our last buy entry right down here. Nailed it perfectly. Look at that move up from basically $1.80 back to $3.46 today. Huge percentage move. You just don't get percentage moves like that very often, folks, so keep that in mind. Okay, that's all for about today. Keep in touch. We'll be back tomorrow with an intraday video to go along with today's and all this week. Also, for those of you that really want to get the insight and really start to learn more and more of our techniques, our analysis tools, join the Research Center at inthemoneystocks.com. It includes everything under the Research Center for just $49.99 per month. Take care, folks. Have a wonderful day.